YouTube, what's going on? It's your boy Drew back with another video. Just want to get on this call, want to break down the trades that I sent out to my investment group. We won one, lost one. Want to break it down, show you exactly why we profited the way that we profited, why each trade played out the way that it did. Break it down, give you guys all the knowledge, give you guys all the necessary things that you need to know, so that way you can apply this exact same information to your own trades, so that way you can start doing this for yourself and whatnot, right? So let's break this down. We'll go on the Euro AUD first. We traded this yesterday morning, Tuesday morning at 12 a.m. I sent this out. This was our before picture. This is where market was. This is where market was at. We saw market down here. Then we obviously got our trade. All right, so boom, market was down there. Then we obviously market gave us that spike to the upside. So want to break this trade down first, show you exactly how I marked this up, why I marked this up the way that I did, why I did what it needed to do, and so on. So let's erase all this. Let's go back to our 4 hour time frame. All right. So remember, for me personally, I primarily only trade the London and New York session. Okay. So theoretically from 12 a.m. to about 8, 9 a.m. or whatever the case may be. I remember, like I said, I'm not necessarily staying up from 12 a.m. to 9 a.m. I'm more so primarily staying up from about 12 a.m. to about 2, 3 a.m. depending on, if I find the confirmation that I need between that time. For this trade in particular, I think I was only up until like 12:30 maybe, because I got all the confirmations. I got everything I needed within the trade, early. So, obviously I got to sleep more. I got to sleep, earlier, things of that nature. But yeah, so I'm on the market from about 12 a.m. to about 3 a.m. So when I was looking at this, let's rewind this. Tuesday, the market was like right here or something. We were looking at it like right here, right? And so, but remember, whenever we're getting onto the market, the first thing that I'm primarily looking for is I need to see some type of break of structure. What I mean by that is, okay, remember, let's reference our picture. I'm gonna draw this out on every single call so that way you guys are familiar. Because remember, this is how you need to be seeing and identifying the market each and every single week, right? So what I'm paying attention to is I want to see this structure, or I want to see this structure forming. So what I mean by that is when we look at Euro 80 from a far perspective, we can see, right, we can see the structure that it's making within the 4 hour. You see how it made its high, made its higher low, made its higher high, higher low, and you see how market is forming to make that next move. So I'm training my mind. I'm not training my mind. This is how I look at the market. But you want to train your mind to look at the market like this, because these are your opportunities to potentially trade. Because remember, what we're doing is we are trading the trend. We're trading where market is already telling us where it wants to go to. So let me draw this out so you can see. So this is what I was looking at real time. When I sent this out to my group, right? So boom, market made that push down, and we see the market's making that next push to the upside. Now remember, the market is theoretically going to be moving in a similar to equal swing. So if market made this move, 9 times out of 10, market's going to make something similar or equal to this move or greater, right? But that doesn't matter. We don't need this whole move. What we're using this, what we're using this for is to map out where this could potentially go to, so that we can get our chunk for the day. That's it. Okay. So when I'm looking at this, right, from a far perspective, I'm seeing this as, hey, this could be a potential opportunity for me to trade, because it identifies this exact same picture of what I'm looking for within a trade, right? So obviously, remember, we're not just going on to one time frame. If you reference back to my first video, right? We're not just looking at one time frame. You have to understand what the overall move is doing. Because look, we could be looking at this like this could be that daily push down, right? This could be that daily push down, and all market's doing right now is retracing from a daily. So if market's retracing from a daily, this could theoretically stop on the dime right here and then keep coming down. Okay. That's why it's very, very important for us to look at the market from the top, have an understanding of what the overall move is doing. So that way, when we go to our time frame that we trade off of, whether that's the 4 hour, or if you like to go deeper and go to the 1 hour or the smaller time frames, right? When we go to these time frames, we know exactly what it is that we're looking for. Because I can look at this all the way from the monthly down to the weekly down to the daily down to the 4 hour and end up looking for sales instead of buys. Now I'd be looking at this like, okay, Now I want to, I'm looking at this as, hey, I want to see this get ready to start taking all this structure out instead of continue to go to the upside. So it's very, very important that we always look at the market from the top all the way to the bottom, right? So now that we have a potential opportunity to trade, right? Let's look at this from the top. And remember, this is what you are supposed to be doing for each and every single one of your trades, right? This is the only way that we're getting into trades. So as you're going to the market and you're kind of flipping through what pair you want to play with, right? Having all your pairs and stuff lined up, you're just looking and seeing, hey, is there a break of structure? Is there a break of structure? Is there a break of structure? Is this trending? That's what we're looking for when we're going on this market. So, with that, with your AUD, the trade I get into, that was how I, identified potentially even getting into this trade. Okay. So remember, let's start from the monthly, right? Identify the trend. Identify the trend within every single time frame. Remember, within every single time frame, there's a trend. Within every single trend, there is a trend. So we need to identify what's making these moves, its moves, so we can accurately identify what is going on within the time frame we trade off of, be 4 hour, right? So identify the trend. So we can clearly see that from a monthly perspective, right? Your AUD is on an upward trend. So we see market making its higher highs, higher lows, right? Market came all the way down. Remember, from this point to this point, this is the lowest point market I got to before this structure got taken out. Okay. So market take out its high. Now look what happened. We see market completely take out that low. So now we have a confirmation that from an overall perspective, that your AUD wants to come to the downside. Now, just because from an overall perspective, like from the monthly time frame, just because from a monthly perspective, this wants to come down, that doesn't necessarily mean that okay, we're only going to be looking for sell. Okay, because remember, what we're doing is we're trying to identify and trade and see what the market is doing right now. Okay, although the overall move wants to come down right now, today, this hour, then these next 4, 5, 6, 7, whatever hours, this move wants to go to the upside. So we need to identify and see, okay, why does it want to go to the upside? Is it retracing from a weekly? Because remember, we're only on the monthly time frame, right? Small little moves like this to the upside is a lot of pips within the 4 hour and the 1 hour, right? So right now it wants to be going up. We need to identify that. So I'm gonna show you guys. Let me draw this out so that way you guys are seeing everything visually. Okay. Boom, boom, boom. All right. Market took out its low, and now we're seeing market retracing. Okay. So right now, obviously, remember, even if your AUD from a monthly perspective wants to come down, remember, market is not just going to take a straight shot down. If market wants to come down, it is going to trend down. So as you can see, right, market share is low, market's retracing, right, and then market's going to get ready to start going to that downside. Market retracing from a monthly perspective is a upward trend from the weekly time frame. Now, when we go to that weekly, we can see that trend we can see the trend within the weekly time frame, which is making these monthly moves. So right here, remember, if we can't identify the trend here, go in the past. These moves were already made. We can start right here. This monthly move down, we can see that trend within the weekly. See how market made its lower lows, lower highs, lower lows, lower highs, lower lows. See market took out its high. We see market came down. We see market came up. We see market failed to make a new high. Market failing to make a new high is an indication that it's getting ready to make a new low. Now, remember, we were already expecting this to happen, right? So now we got that confirmation that this overall wants to come to the downside. Because remember, from the monthly perspective, right, when we look at this from that monthly perspective, we can see that market took out that last low, right? Now, once market made that retracement from monthly, remember our EMAs are treated like a support and resistance. See how market came up, see how market hit right on our EMAs, right? We're right on our EMA zone right now, right? So we're not expecting this to continuously making a push to the upside. We're expecting to start giving us some type of confirmation that this wants to drop. So boom, market came all the way up, failed to make a new high, completely took out our low. So now we know that the overall move of this wants to come to the downside. So let's draw this out. This is the weekly time frame. Market took out its low. Okay. So now the market took out its low. Okay. I think so. This candlestick is representing the candlestick from where it's at right now, currently. Okay. On Tuesday, yeah, Tuesday morning at 12, market wasn't all the way up here. Market was all the way down here. So I say that to say what I mean by even though the overall move wants to come to the downside, okay, understand how the way the market moves and flows. Even though we have that confirmation that this monthly move is going to get replicated, or the market's going to start making that move to the downside, what we have to understand is it's not just going to take a straight shot to the downside, right? Market's going to come down, it's going to trend it down, meaning from a weekly perspective, market's going to make a series of lower lows and lower highs. Okay. So given the fact that market just took out this low, we know that, hey, this isn't going to keep coming down forever. This is eventually going to start to retrace. Okay. So now the market took out that low, we are expecting this. We're expecting EURAUD from a weekly perspective to start to retrace. So if market's going to start retracing, remember that is going to be an upward trend from a daily and the 4 hour, which means that we would theoretically be looking for buys potentially. Okay. So okay, so now that we're looking at this, right? Let's go to the daily. Let's see where market's currently at within the daily perspective. Okay. Go in the past, right? Can't see what's going on right here. It's going in the past. So yeah, I think because it's Wednesday right now, I think it like plays the entire thing out. So this is the move that we caught, but remember it wasn't all the way up here. It was like down here or something. Um, so boom, when we mark this up, okay, we can see that this move is already made. So we can see that trend. We see market came all the way down, came back up, came down. We see that when market made that push back up, took out its high, market came down, higher low, market came all the way back up, right? Market came down, market came back up, market made that push all the way down. So obviously market's now making that push to the downside, took out that low, high, lower high, low. Okay. So now where we're at within the market, right? So right now we're at an area of price where market could potentially shift. Why is that? Because market took out that last weekly low. So remember, this is that weekly trend. Okay. Once market takes out this weekly low, we're not expecting this to continue dropping, right? We know that this needs to start retracing at some point. And the smaller time frames are always going to confirm whatever we're looking at. Because even if it's wanted to make like a greater push to the downside, the small time frames are going to be telling us because remember, with every trend, there's a trend. This daily move up is a trend within the 4 hour. So if we start seeing a break of structure, because honestly, if market wanted to keep coming down, it would have respected where it's at right here. Okay. If market wanted to keep making this push to the downside, we would have started seeing a break of structure within the 4 hour perspective, meaning we would have started seeing 4 hour lows getting taken out, 4 hour, market making lower highs and whatnot within this structure. But if we're seeing that market is still continuously respecting that upward trend, then we know that this wants to keep going to the upside. And like I said, we're at an area of price where market, is you could potentially shift. So I'm kind of like deliberately looking for confirmations and reasons to buy this more so than to sell this. If that makes sense. So let me draw this out. Uh, okay. So if market wants to start retracing from a weekly perspective, what would that mean? That would mean that this needs to start going on an upward trend within the daily perspective. So how is this going to go on an upward trend within the daily perspective? Well, what needs to happen is that last daily high that it made needs to get taken out. Okay. Well, we're expecting this to do is we're expecting market to take out that high, trace, maybe go a little bit higher, and then start dropping. Okay. That's how the market moves and flows. So understanding how the way the market moves and flows, understanding that we're expecting this high to get taken out, that would mean that that 4-hour trend obviously needs to keep being respected. Okay, so we're expecting that daily high to get taken out. So that would mean that this 4-hour high needs to continue to be respected. So remember when we looked at this, let me erase all this just so we can see better. Okay. So remember when we looked at this from that 4-hour perspective, when we start on the 4-hour, we're like, hey, I'm seeing this as a potential buy. Remember this structure. Okay. This is what we're looking at. All right. Remember the structure. This is what we're looking at. This is what we're trading. This is what we're training our minds to look at when we're getting onto this market. This was the first thing that we saw. Okay. This was the first thing that we saw when we opened up Euro AUD. Okay. I'm seeing this as an opportunity to continue making that push to the upside. Now, when we look at this all the way from the top, we can see that, hey, what we're looking at actually goes with everything, actually goes with what I'm seeing within the 4-hour perspective. Right? Market took out that low. Market's getting ready to retrace from that weekly, which is going to be an upward trend within the daily. If that upward trend within the daily is going to be respected, then that 4-hour time frame is going to tell us. Okay. But right now, right, we're expecting this to continuously make that push to the upside. So now for me, when I'm looking at this, I'm seeing this as hey, this is an opportunity for me to get into this trade to buy. Okay. Let me just drop. Boom. Boom. Okay. So this is what I'm looking at real time. I'm marking up exactly how I was looking at it. Um, exactly what I was looking at when I saw this. So boom. Now that we have our confirmation as to okay, yeah, this is getting ready to go to our upside, right? Now we need to find our confirmations and find our opportunity to go up with it. So remember, market is moving in a similar equal swing. We know that market's gonna at least make something similar to this move. Okay. Now remember, I don't need this entire move. I don't need to catch this whole entire thing. I need to find my opportunity to just get the chunk that I need out of this. What do I need? A 1-to-2 ratio, right? I need a 1-to-2 ratio on every single thing that I get into from now all the way until December 31st, right? I do that and I win 50, 60, 70% of my trades. I'm going to consistently be profitable. That's it. Okay. So while I'm looking at this, guys, so what is the main confirmation that I need? I just need to see a break of structure within the 4-hour time frame, right? So right now, I think so. Let me open up the next candle. I think it doesn't show exactly how it looked when. So this move didn't happen yet. So when we were looking at this, so at 1 or at 12 a.m., see where market was at. Okay, so this is where market was at 12 a.m. This is where it opened up. Okay. So at 12 a.m., remember, like I said, I got on this trade very, very quickly. It was at like 12:20 or whatever when this broke the structure. But market I got to right here. We go to that 4-hour. Okay. Now that we see market, oops. Now that we see market break that 4-hour structure, okay, so let's say I think I got it like a little bit higher, it's like somewhere up here. Okay. Now that we got our confirmation that this wants to go to the upside by breaking that last 4-hour candlestick, now boom, remember our entry, our stop loss, our take profit is all based off our 4-hour candlesticks. Okay. So boom, market took out its high, or market took out that last candlestick high. Now we're just trading this. Right, we're just trading this structure. We know that we have all this room to play with. We have all this room to give us what we want, right? We already know that market's going to make something similar to this. So now we get our 1-to-2 ratio. All right, we get our 1-to-2 ratio. Okay, where's our 1-to-2 at? Okay, so as you can see, this is where our 1-to-2 would be at. So we're risking 1 to make 2. Okay. What I mean by 1-to-2 ratio too is put in perspective like this. Um, let's say you're playing with like a $5,000 account. Okay. obviously, you want to be risking properly too. Remember, the whole name of the game of trading, of being consistently profitable, is managing your risk and just doing the same thing every single time. You're not going to win every trade, right? I think that's kind of like the misconception with a lot of people, and probably why a lot of people aren't profitable and you're not seeing consistent results is because they don't understand that you have to lose to win. So understand that you're going to lose trades. It's inevitable. There's no perfect strategy. There's no strategy out there that's going to give you every single trade you get into is 100%. Literally, I lost my trade this morning, which we're going to go over that as well. Okay. No trade is going to be consistent profitable. But what I want to do is I want to give myself the opportunity to, even though I'm losing, I'm still going to be winning at the end because our wins are always going to outweigh our losses every single time, right? So if I can do 100 trades for the year and I win 50 of those, I'm going to be significantly profitable, right? Because as you're winning, your account's growing. As your account's growing, you're going to be able to risk a little bit more. If I have $5,000 in my account and I'm risking $500, eventually that $500 is going to turn my account to $10,000. Now I can risk a little bit more. I can now risk $1,000. I risk $1,000. We get that account $20,000. $20,000. I can risk probably $3,000, and you just keep growing and growing and growing and growing, right? So the whole name of the game, the whole idea is, hey, how do I just win half my trade? Honestly, I've had years where I've met where I've cleared 60% of my trade. 5%, almost 70%, 50%, right? So it's just a matter of just doing the same thing every single time, finding what you need, finding your structure that you're looking for, and just playing that game every single time and letting the numbers play out. That's all it is. All right, so boom, we see market take out that high. Like I said, market was like down here. We play this out. And all right, we play this out. As we can see, market gave us market gave us what we needed. Hit at, let me pause this. So this hit take profit at 7 a.m. Okay. So we got in at 12. I went to sleep, woke up, at about 6, went to the gym, did all that. By the time I got done, I profited. Right. So like I said, per perspective, I forgot. If you have if you were playing with like a $5,000 account and you risked 500. So what I mean by 1 to 2 ratios is if you risked 500 and this came and hit take profit, you just made $1,000. You have $1,000 for the week. Your account went from 5,000 to 6,000. Okay, so let's put in perspective. There's 4 weeks within the year. Let's say we get into 2 trades each week, right? I won one for 1,000. I lost one for 500. I lost my trade today I lost my trade today. So let's say in perspective, you lost this GBPJPY trade, which is what I'm about to go over, right? You made $500 for the week. Let's say you do that every single week. You win one, you lose one. You win one, you lose one. You win one, you lose one, right? So let's say we get to the end of February, or it's the end of February right now, and you did that week after week in February, right? You'd be in profit over $2,000 right now, or $2,000 right now. You grew your account from 5,000 to $2,000. That's an extra $2,000 for the month. I mean, let's say you're working, you have a job, and you're making 5,000 a month. I made $7,000 a month. Just like that. We didn't even win every single trade. We don't need to win every single trade. That's what I'm. That's going to be like the whole name of the game of this channel and my education and teachings. We don't need to be perfect. You don't need to be perfect, right? Um, but yeah, so this is your AUD and rinse and repeat. Don't get too high. Don't get too high on wins. Don't get too high on lows because we're doing the same thing every single time, right? We're doing the same thing every single time. So this is your AUD. This is how I broke this down. This is how we had profit on this. Um, Now, let's go over the GBPJPY trade that I sent out this morning at 12 a.m. This was another quick trade. We had gotten into this um, like literally 12 o'clock. 12 o'clock hit. They already gave us the confirmation we needed. We got into it. Now, the funny thing about this trade is, funny thing about this trade is, as you can see, it actually hit the take profit on me. it actually played out exactly how we wanted it to do. But as you can see, we had gotten somewhere right here. It had made a big spike to the downside and then just kept shooting up. Oh well, happened, right? Remember, nothing that we do in this market is gonna be perfect, right? Like I said, what we're doing is we are taking our probabilities and we're using it to our advantage, right? We understand that our knowledge and understanding the market is always gonna play out the way that we want it to by the end of the month, by the end of the year, by the end of the week, or whatever the case may be, right? We know that our probabilities are always going to be at an advantage because obviously we're trading a 1-to-2 ratio. I just need to win half my trades and I'm going to be profitable regardless. Okay. So GPJPY, let's go over this. Like I said, it ended up hitting the take profit, but it hit our stop loss first and then made a push upside. All good. Next trade, do the same thing. We'll get it back. All right. So let's rewind this. Let's see where we were at. Okay, so we were like right here. I have to rewind. Um, okay. GPJPY. So when I was looking at this, remember, going into the market is all I'm seeing, right? I'm just identifying, is there some sort of break of structure, right? Is there something for me to potentially play with? Right? Remember, I'm not going on this. I'm not going on this looking at this like, oh, let me just get in this. No, I'm seeing, hey, is there anything that I can potentially, mark up? No, I'm not marking up all this stuff, right? I'm not marking up every single trade and looking at every single pair and whatnot. No, I'm looking at the pairs that give me a potential opportunity. I'm looking at it from the top, going all the way to the bottom, and if it lines up with everything that I'm looking for in the trade, then I'm gonna trade it. So with this in particular, when I was looking at this, I was seeing this as okay, hey, this could potentially be getting ready to go to the upside. Why is that? Because we can see here, we can see that market's making its lower lows, lower highs, lower lows, lower highs, lows, lower highs, lows. Okay. And we see that market came up into here, and we see that market is very, very is struggling to go past this low. We can see it came down here, came down here, came down here, and we're starting to see that shift to the upside. We're starting to see this 4 hour candle getting taken out. We're getting in the midst of London session, which is one of the most lucrative sessions in the market. So if we're not seeing any type of continuous movement to the downside, that's telling me that this could potentially start making a push to the upside, right? But the main confirmation as to why I even marked this up is because I'm seeing that market's failing to make a new low, right? So I'm seeing this as a potential opportunity for, hey, since this is failing to make a new low, if market's failing to make a new low, that is an indication that market is getting ready to make a new high, right? So we could potentially be getting in this for a buy for this to continue to go up. Remember this picture right here. Boom. Goes up, or market fails to make a new low, we want this to continue going up. Okay. So remember, just train your mind. I'm gonna say this on every call. And as you keep trading, you're gonna start seeing, this is how you're gonna start just, naturally seeing the market, right? You're gonna start naturally seeing the market just like this. So yeah, this is what I was looking at. This is why I even, potentially mark this up. Okay. Now remember, we need to look at it from the top. What is the overall picture telling us? When we erase that, let's go to the monthly. Right? So from a monthly perspective, right? And remember, you don't have to start all the way down here. Like honestly, like if we're being real, what the only thing I really need to look at, and I mean for me personally, obviously got been trading for years, like I can kind of just naturally see this without having to go all the way past here. I'm honestly just looking at this, right? I can see this move. So you came down, came up. It's either going to continue to go down or it's going to continue to make that upside, right? But obviously, if you're new and you're still trying to figure out how to identify structure, just draw it out. I can see this came down in here. This was the highest point I got to. Came up, came down, came up, came down. Right. So let's okay. So market's making higher highs, higher lows. highs, lows, lows, okay? Market came up, seeing market getting ready to make that push to the downside. Obviously, market's going to keep coming down. Market's going to make a similar to equal swing than it did before. Okay, so that's what we're looking at. That's how we're seeing GBJPY right now from that monthly perspective. Let's go to the weekly. Obviously, if that move's going to come down, there's going to be a downward trend within the weekly perspective. Okay, so here, right? Understand how the market moves and flows. Right? Obviously, market made that big push down, came up, came down, up, came down. We see market failed to make a new high, giving us that indication that this wants to keep coming down and make a new low, which is what it did, right? So now look here, okay? We see that market made this move right here. Remember, like I said, the market's going to move in a similar to equal swing, right? It's going to make a similar move. If it just made this move to the downside, 9 times out of 10 is going to make that similar movement again, okay? So you see how market made that exact same movement. So once market makes a similar to equal swing, I am not expecting this to keep coming down, right? I'm not even looking to try and sell. I'm not even looking to try and sell it, right? Because we don't know how low it's going to go to. Remember, like I said, we're using these swings, we're using these moves to map out where the next move is going to go. So now that we've mapped out this move and it made that move, we don't know how low it's going to go to. At this point, it's just guessing. We don't guess the market, we trade the market, right? We're never guessing, we're never gambling, we are trading. So now that we don't know how low this is going to go to, the only way that I would try and get into GBJPY is if it is for a buy, because now that it made this similar swing, I'm now expecting this to start retracing to the upside from the weekly. Market retracement weekly is an upward trend within the 4 hour and the daily and so on. Okay, so now the only way I'll get into this is if I start seeing confirmation that this wants to go to the upside, right? Seeing 4 hour highs getting taken out, seeing daily highs and whatnot getting taken out in this area. So now when we go to the daily, right? When we go to that daily time frame, look at the confirmation that this is giving us, right? Remember the smaller times are literally going to tell you everything. There's no need to even try and like guess and like gamble with this market because it literally tells you what it wants to do, right? You just need to, you know, have an understanding of how the market is moving and flowing, and then you're not going to be catching yourself gambling and you know staying in trades too long and getting into trades that you don't need to because there's just no point, right? So when I'm looking at this, I see that market came up. I see that market is failing to make a new low, right? We are expecting this to happen because of where we're at within the market. So let me draw this out. I'm not going to draw it. um, boom. Okay. So remember, let's draw this picture out. Let's draw this picture on the side right here. Okay. How do we know when market wants to shift? If market is failing to make a new low, that's an indication that market's getting ready to make a new high. Okay. So if market's on a downward trend, this is what it's going to do. It's going to make a series of lower lows, lower highs, lower lows, lower high, lower low. Okay. What market's going to do is market's going to fail to make a new low, fail to make a new low, then start making that push to the upside, and now it's going to be on an upward trend. Okay, it's how the way the market moves and flows. So now that we're sitting at an area price where market can shift, okay, why is that? Why is this an area price where market can shift? Because market made a similar to equal swing. Okay, now that market made a similar to equal swing, the way that the market moves forward, remember, this monthly move is not going to keep coming down. Market is going to trend down, right? So now the market made that similar to equal swing. We're expecting this to start retracing up from that weekly, which in return is going to be an upward trend within the daily, right? So given the fact that we're sitting at an area price, I'll just keep there. Given the fact that from a daily perspective, Um, there's two things that this could possibly do. This could either continue making a push to the downside, because obviously market can make a greater movement. It can come all the way down here and then start to shift, but it can start making that push right now. So how do we identify? How do we know when it wants to start going to the upside? When we start seeing market failing to make a new low, that's an indication the market's getting ready to make a new high. So how do we know that? By identifying the trend within the 4-hour perspective. If we start seeing that 4-hour trend getting broken before that daily low gets broken, that is telling us that market is getting ready to go to the upside. So now when we go to that 4-hour, okay, remember when we looked at this, when we started looking at this from that 4-hour perspective, what was the first thing I noticed? The first thing I noticed was market failed to make a new low within the 4-hour, and it has been shifting to the upside. Is this? Oh shoot! Or I thought I did rewind it all the way to here. But anyway, this is where it's at right now. Let me rewind. I don't know why I played that. This is where we were at when we were looking at it real time, right? So now, remember, let me draw this out. So now we see market making its lower lows, lower highs, lows, lower highs, lows, lower highs, right? Lows. We see market came up. We see market's been failing to break this structure, and we see the market has been getting ready to make its push to the upside. So me identifying this, I'll draw this up too. Came up. Big push to the up. Came down, came up, down, up, came up, down. Just kidding. Um, boom. Market fails to make a new low, right? Market fails to make a new low. That's an indication that's getting ready to go to upside. Okay. So now all I'm doing is I'm waiting for that confirmation. Actually, when I got into this trade, I already had the confirmation because that next candle, like when I opened this at 12 a.m., it was already past that last 4-hour high. So that was the only confirmation that I needed. We played out. Okay. So like I said, when I played this out, so at 1 a.m., right, this is where market was at. All this move didn't happen yet, right? So me seeing that confirmation, I'm seeing this as a potential opportunity to buy, right? So boom, we had bought it. We had bought it. Actually, literally, this was already out, and market was like down here. So it was really, really great trade for us to get into. But when we had bought it right here, like I said, we already had that confirmation that I got out. My stop loss was right below that last candle. Okay, stop loss right below that last candle. We got our 1-to-2 ratio because remember, market's going to make it similar to equal swing. So we're expecting this. Oops. We are expecting this to at least make this move. We're expecting market to at least make this move. Right. We're expecting market to, obviously at least make this move to the upside. So obviously take out that high. We got our 1-to-2 ratio. All right, we get our 1-to-2 ratio. So we just needed mark to come here. Boom. Just need market to come about right there. So as you can see within the 1 hour, right? The 1 hour time frame. So remember, like I said, market was right here, right here. So as you can see, 12 a.m. This is where market was at when we had gotten into it. Then it got into it, fell right asleep. Okay. You see the market made a big spike down, took out that 4-hour high. As you can see, our overall bias was still correct. That's all that matters. As long as as long for me personally, as long as my direction is right, as long as my overall initial analysis is right, I'm okay, right? Because like I said, we're gonna see a lot of trades like this. We're gonna have a lot of trades where it barely touches our stop loss, goes all the way to our take profit, or whatever the case may be, right? As long as we are consistent with our entries, consistent with our exits, consistent with our stop losses, it's all good, man. The whole name of the game of trading, understanding how to losing properly, losing, efficiently, and going on to the next trade, and just keep doing the same thing. So yeah, these are my two trades so far. We traded Tuesday, we traded Wednesday. We'll see if we can catch something Thursday morning. Hope you guys got a lot of value out of this call, to these two trades. Like I said, these two trades that we're sending my investment group. But other than that, like, subscribe, turn the notifications on every single time I drop a video. There's a lot, as you can see, there's a lot of knowledge, a lot of value that I'm dropping in each and every single one of my calls. So make sure you have that turned on. Make sure you guys are taking notes, and not only that, make sure you're applying the information. Don't just watch these videos. Apply it. Learn. Apply everything that you're learning and go into the actual market so you can see it yourself. So that way you can learn for yourself, so on and so forth. So remember, like I said, like, subscribe, turn the notifications on. Follow me on Instagram at AndrewOKO23, and let's keep progressing and getting better at the skill set. I'll see you guys on the next video. Deuces.